Welcome, everyone. It's June 9th, 2025, and you're tuned in to the 56th episode of Finwell Daily Brief. We're looking at today's market closing data from India.
Yes, fresh off the press. We'll be digging into how the markets did, specific stocks making moves, bonds, currency.
And importantly, an IPO analysis and a fraud warning, too. Quite a bit to cover based on the material we have.
Our mission, as always, is to pull out what really matters, understand the story behind the numbers in today's environment.
Absolutely. And actually, speaking of stories, there's one piece of data from the material that really jumped out. Let's maybe start right there with today's financial fact of the day.
Sounds good. What's really quite striking is the scale of domestic investor money flowing in, especially into certain areas.
Oh, tell us more.
Well, the data shows Indian mid and small cap mutual funds have seen, get this, over ours, 2.46 lakh crore in SIP inflows.
Wow, 2.46 lakh crore just through SIPs.
Just through SIPs over the last year alone. And here's the kicker. 65% of new retail investments coming in, they're going straight into these mid and small cap funds.
65% of new money.
Yeah.
That's a massive concentration. What does that tell you?
It shouts really significant and growing risk appetite. Domestic investors aren't just sticking to the large caps, the Nifty 50 mainstays. They're actively seeking growth, further down the line.
So this domestic flow is a major force right now.
Absolutely. It's influencing liquidity, influencing market dynamics in a big way.
And you kind of see that reflected in today's closing numbers, can't you? The overall market was positive. Nifty 50 finished up 0.40%, closing at 25,103.75.
Right. And the Sensex also hit a 2025 high, closing up over 250 points. Good day for the large caps.
But it gets even more interesting when you look beyond the main index.
Exactly. Look at the Nifty Mid-Cap 150. It closed at 21,907.90, up a strong 1.01%.
Okay, nice jump.
And the Nifty Small Cap 250, even better, up an impressive 1.33%, closing at 17,515.75.
Right, so significantly higher than the Nifty 50 gain.
Precisely. The Nifty Total Market Index, covering everything, was up 0.74% at 13,131.90. So large caps hit highs, yes, but the mid and small caps were clearly leading the charge today.
Which ties right back to that financial fact, doesn't it? That retail money seems to be directly pushing these segments.
It certainly looks that way. That consistent inflow is providing major support. Now, the broader reasons mentioned for the rally today were positive global cues and some optimism around the U.S.-China trade discussions.
Okay, so a generally positive backdrop, but fueled strongly by domestic flows into smaller stocks. Zooming in a bit, which sectors were really driving things today? The material pointed to banking and IT.
Yes, they were the clear standouts. Banking in particular. The Nifty Bank Index had a fantastic day. It actually broke through 57,000 for the first time ever.
57,000. That's a huge milestone for the banking index. Which banks were doing the heavy lifting there?
The material highlighted Kotak Mahindra Bank, Bajaj Finance, Axis Bank, IndusInd Bank, and SBI as the main engines behind that surge.
And Bajaj Finance, didn't that have some specific news boosting it?
It did, yes. Bajaj Finance hit a record high, and that seems linked to them setting June 16th as the record date for their stock split and bonus issue. Things like splits and bonuses often attract investor attention,
It creates a bit of buzz. Okay, so financial strong. What about other areas? The material mentioned NTPC.
Yeah, good news for the energy sector. NTPC started commercial operations for 193 mW at its Nook solar PV project in Rajasthan. That bumps up their total capacity.
And the stock reacted positively.
Gained over 1%. It's a sign of progress in renewables, which is always watched closely.
And infrastructure seemed active too. PNC Infratech.
Definitely. Their shares jumped nearly 5% today.
Wow, why the big leap?
They bagged a pretty decent project, ours, 239.94 crore to build a flyover in Fartpur, Rajasthan. Winning new orders like that is always a positive signal for infra companies.
Okay, and even cement is looking ahead with some optimism.
Yeah, the material mentioned Dalmia Bharat's outlook. They're expecting cement industry growth to pick up nicely, maybe 7-8% next financial year, FY25.
After a slower FY25.
Exactly. They pointed to sector consolidation and ongoing capacity expansion driving that expected rebound. So you see positive signals across infra, cement, renewables, alongside those strong financials.
Okay, so equity is painting a pretty bright picture. New highs, strong sectors, fueled by that domestic retail wave, especially mid and small caps. But let's shift gears slightly. What about other indicators? Bond yields.
Ah, yes, the 10-year government bond yield. It actually moved up today, climbing 5 basis points to 6.35%.
Up, highest since mid-May, right?
Okay.
What's the thinking there when equities are rallying?
Well, the analysis suggests the market is basically fully pricing in the RBI's recent neutral policy stance. It means the bond market isn't expecting much more, if any, rate cuts soon.
So a bit of a reality check from the bond market, perhaps. Higher rates for longer.
Could be seen that way, yes. It acts as a bit of a counterweight to the equity market enthusiasm, especially for rate-sensitive sectors.
Interesting nuance.
Yeah.
And the rupee, how's it holding up against the dollar?
Pretty stable, actually, trading around 85.68 per US dollar today.
And why the stability?
The reports attribute it to RBI interventions. Looks like the central bank is actively managing things, stepping in to balance out dollar demand from importers and FPIs. So managed stability, you could say.
Got it. Okay, so lots of green on the screen, but also these subtle shifts in bonds. Now, it's crucial we also look at the risks highlighted in the material. Let's talk about that SME IPO Securum Ltd.
Right, a small and medium enterprise IPO. Price band Rs 95 to 100, aiming for about Rs 41.2 crore. It closes June 12th.
And the analysis wasn't exactly glowing, was it? Lots of red flags mentioned.
No, it was quite direct, quite critical. The flags are pretty significant. First off, it's described as a low-margin business. It's in the fragrance flavor space, which is very competitive.
Low margins, okay. What else?
EBITDA margins are apparently below peers. Then there's working capital risk. A lot of money tied up in receivables, what customers owe them, and also high inventory days. That can squeeze cash flow.
That sounds tricky.
And customer concentration is another big one. The top 5 clients make up over 60% of their revenue. That's a lot of dependency on just a few customers.
Oof, yeah, that's risky.
And maybe the most telling point, a lack of anchor investors. No big institutional money came in up front, despite marketing efforts.
So putting all those flags together, what was the final verdict in the material?
It was pretty blunt. Assessed as a high-risk, low-moat business in a cyclical sector. Low-moat meaning it lacks strong competitive protection. The clear advice was for retail investors to be extremely cautious.
Especially avoid FOMO, right? Fear of missing out.
Exactly. Avoid FOMO-driven entries. It's a call to really scrutinize the business quality, not just jump in because the market feels hot. A very important warning given the retail inflows we discussed.
Absolutely critical. And there was another major warning, a different kind of risk Forex and binary options fraud.
Yes, this is so important right now with more people investing online. The material detailed how scammers are setting up these fake trading platforms.
How do they operate?
They lure you in with promises of guaranteed massive returns. They might even show you fake initial profits to get you to deposit more money. But the trading isn't real. The results are manipulated.
And the end result.
Victims lose everything. They find they simply can't withdraw their funds. It's basically theft dressed up as trading.
Scary stuff. What are the warning signs people need to watch out for?
Be very wary of unsolicited ads on social media pushing trading schemes, high-pressure sales tactics, invest now, deposit more, and the biggest red flag. Anyone claiming risk-free profits or guaranteeing returns, that just doesn't happen in real markets.
So what's the protect?
The advice is crystal clear. Only use brokers registered with SEBI, the market regulator. Avoid any unregulated platform, especially ones making unbelievable promises. With so many new retail investors, staying vigilant against these scams is just paramount.
Couldn't agree more. Understanding the potential dangers is just as vital as spotting opportunities, especially in an enthusiastic market. And just before we wrap up today's Finwell Daily Brief, if you're finding this breakdown of the day's financial material useful, please do hit that subscribe button wherever you listen. And to connect further, maybe see the kind of material we draw from, you can find SOS Finwell on LinkedIn. So pulling it all together from today's closing data, Indian markets hit new highs for 2025, led strongly by banking and IT. We see this massive undercurrent of domestic retail money flowing, especially into mid and small caps, which really outperformed today. There's positive news flow in areas like infra and cement, too.
But definitely keep an eye on that rising bond yield. It suggests the market's getting a bit more cautious about easy money from the RBI continuing indefinitely.
Right, and risks remain.
Absolutely. Global factors like trade talks, U.S. inflation data coming up, those can always bring volatility. And potential spikes in bond yields are something to watch. The underlying message from the analysis seemed to be, focus on quality, be careful with potentially stretched mid-caps, And definitely steer clear of highly speculative plays.
Like that IPO warning highlighted.
Exactly, and avoid those outright scams like the Forex ones mentioned.
Understanding all these pieces, the big index moves, the sector leaders, the retail flows, the bond market signals, the specific risks, it really helps you, the listener, grasp the forces shaping the market right now. It's not just one simple story.
It's a complex landscape, definitely.
You know, the material we looked at ended with a quote. It feels incredibly apt for today's discussion, especially with the market highs and those cautionary notes. It's Warren Buffett. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price.
Ah, classic Buffett. And it really hits home, doesn't it? Particularly today. When the market's hot, risk appetite is high, and you see warnings about potentially, let's say, lower quality IPOs being chased. That quote is a powerful reminder.
How so?
It emphasizes that the quality of the business itself, the wonderful company part, its competitive edge, its moat, is fundamentally more important than just snagging a stock at what seems like a bargain, a wonderful price. Especially if that price is for a mediocre or fair or even risky business like the analysis suggested for Sakura.
Focus on quality over just the price tag.
Precisely. It grounds you, especially when there's a lot of excitement around.
It certainly makes you think. So here's a thought to leave you with. In this market, hitting new highs, clearly showing increased risk appetite. How do you apply that principle? How do you find that wonderful company at a fair price? What does it actually look like in your investment approach today? Something to mull over. And one final crucial point. The material used for today's Finwell Daily Brief clearly stated the information is for informational purposes only. All market data comes from SEBI-registered exchanges and filings. Please always consult with a certified financial advisor before making any investment decisions based on this or any other information. Thanks for joining us on Finwell Daily Brief, and we'll catch you next time with more insights from the latest financial news.